Let's start with the elephant in the room, because you guys are nervous fucking Nellies. Oh my God, everything is so scary. The crypto, it went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean that Bitcoin's going to 70,000? Calm the fuck down. Just buy the fucking dip. Part of the don't fuck this up philosophy is buy the fucking dip. We are nowhere near the top. You've got nothing to fear except fear itself, or I don't know what you fear. I don't get it. I don't get it. It's just normal stuff, right? Market goes up, market goes down. You will get big drawdowns very quickly. You might shit your pants unless you've been around for a couple of cycles. That's fine. You can buy new underwear and it'll all be okay, because the market over time will go up until the business cycle peaks, the liquidity cycle peaks, the financial conditions peak. We're just on the way up. So there's nothing to worry about. Okay.
In today's market insight of Raoul Pal, the CEO of Real Vision, who has some intriguing perspectives on the current state of the crypto market, market cycles, and how the political landscape could influence financial markets moving forward. As we step into 2025, many investors are feeling uncertain about the crypto landscape. However, Raoul Pal argues that we are not in a bear market and emphasizes the importance of buying the dip. Let's explore his views on crypto market cycles and why he believes the Trump administration will be bullish for financial markets. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Raoul Pal asserts that the crypto market is experiencing a significant bull run. Bitcoin has recently broken its all-time high, and altcoins are also gaining traction. This surge is not just a fleeting moment. It represents a broader trend that investors should pay attention to. According to Pal, this is an opportune time for investors to capitalize on potential gains by purchasing during dips rather than selling off in fear. Pal explains that every 4 years, governments inject massive liquidity into the economy to refinance debts. This creates a favorable environment for assets like cryptocurrencies to thrive. The current environment is no different. As liquidity increases, so too does the potential for significant price movements in crypto assets. Given the cyclical nature and the current liquidity environment, Pal encourages investors to buy during dips rather than panic sell. He warns against the psychological traps that often ensnare investors. Those who sell early out of fear often miss out on substantial gains when the market rebounds. Historical data shows that Bitcoin has consistently provided impressive annualized returns since 2012, making it a compelling investment option even amidst volatility. Pal also discusses how political changes can impact financial markets. With Donald Trump back in office and actively engaging with crypto stakeholders, there's a renewed sense of optimism within the industry. According to Pal, senior figures within Trump's administration are increasingly vocal about their support for cryptocurrencies and decentralized finance, DeFi. This engagement could signal a shift in regulatory attitudes towards crypto, potentially leading to broader adoption and investment inflows. Let's watch Raoul Pal's full video presentation.
Let's start with the elephant in the room, because you guys are nervous fucking Nellies. Oh my God, everything is so scary. The crypto, it went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean that Bitcoin's going to 70,000? Calm the fuck down. You all need to grow some cojones, and you need to learn stoicism, inner peace, meditate, do anything but stop bleating on Twitter about your fears all day. If we did that anywhere else, people would get really bored of us. I get really bored of it. So let me talk you through why you should stop your bleating. Firstly, in 2017, we had a new president of the United States that shocked everybody getting voted in, called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump, who is coming in on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now? And oh my God, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me. What does it mean for my shit coins? Okay. It all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern, which kind of says that global M2 should probably base around here. Again, don't expect perfection, but expect some repeat. Oh, the NASDAQ did something similar too. It would suggest the NASDAQ should be going up pretty sharply now. And lo and behold, today, the NASDAQ has a really strong day. Feels about right. Old Trumpy boy's about to come in. But it's about the dollar. The dollar's been strong. That's what's been driving global M2. And guess what? It was identical back then too. Now, this chart's been copied by every fucker on X because they're too lazy to do their own research. Started with us, as all these charts did. The M2 charts, all of them, was myself and Julian Battelle, a global macro investor, and then Real Vision Pro macro, and then we spread it further with the world, and they all get copied. But I guess it's flattering. What it's suggesting is Scott Bessent speaks, I think tomorrow. He should start signaling, along with Steve Mirren, that the dollar is too strong and it needs to weaken. The dollar is being used as a weapon against China, Europe, Canada, and anybody else who has trade deals to do. They've all got weak currencies. It's a problem. The US also wants a weak dollar, but they know a strong dollar forces people to the table. But we also know they've already been negotiating. So what we're likely to see is talking the dollar lower from Scott Bessent. It is very important they do so because the US needs to increase its exports. Everybody needs the economic cycle to increase. The Chinese, well, we need them to stimulate because without the Chinese, we don't have a global economy. We have a lopsided economy. And for them to buy US goods, their economy needs to be growing. But they need to stimulate. But if they stimulate with the dollar too strong, their currency peg breaks and they don't want to do that because then you get capital flight. So it's a very fine balancing act of geopolitics and economics and interconnectedness and this kind of global dollar system that they need the US to weaken the dollar. If the US weakens the dollar and injects liquidity into the eurodollar market, which is the offshore dollar market, the Chinese can access it and they can roll their dollar debts. They can start doing quantitative easing. They can start stimulating massively. The global economy can start recovering. They can start buying US goods. Everybody is a winner. So the dollar will come lower. I've known Scott for a long time and he understands the big picture. So I'm just going to have a try that's killer. So the dollar weakening is the next big thing. Crypto. Here's Bitcoin, following the same pattern roughly. 2017 has been my base case for a while. Do not expect it to be identical, but and do not expect it to be going to wherever the scale says. I'm not looking for $1 million Bitcoin. Sure, there's a probability, but it's like 5%. But directionally, we should get this right, and it should continue to rally into the end of the year, into 2025, and maybe into early 26. We'll have to wait and see. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here. And this is the typical post-correction halving. So what we have is the start of the banana zone, which we talked about from about September, and that was when Bitcoin hit 50,000. The banana zone t-shirt, buy the merch. There's a load of shit. There's amazing Real Vision merch, and the banana zone is the coolest ones of all. And don't fuck this up, because that's the other one. That's the important lesson you guys need to learn. So the first banana zone phase 1, that was this period here, as we come up from the sell-off from the halving. Then we have the correction from the banana zone phase 1. Happens every time. Then what do we get? The banana singularity. That's the next bit, when everything just goes up. And it makes us all look like geniuses. Every stupid shitcoin we've ever bought goes up. Everything goes up. And we think we're gods, which we're obviously not. We're probably just morons trying to do our best. But luckily, crypto market, it trends up over time, so it kind of covers all sins. As long as you're not too far out the shitcoin curve, you'll generally be fine over time, particularly if you don't fuck this up and stick to the big ones. They generally do fine over time. So it can cover all of your sins, your terrible entry points, all your stupid mistakes. I think it'll be fine. So that's what I'm expecting next. We should be starting now. Let's talk about the dollar again. Dollar is a wrecking ball. A strong dollar lowers economic growth. The US Economic Surprises Index shows that it follows the dollar. The dollar has a 2-month lead. The dollar's strong. The economy slows down. So we're expecting to see the US economy slowing down over the next coming 2 months, and sharply so. And bond yields have been going up. This is inverse of bond yields. That also brings down economic growth. So rising yields, a rising dollar leads to falling growth, which leads to rate cuts coming back to be priced in, which is liquidity is coming. Another way of liquidity is rate cuts. Rate cuts are not the best measure of liquidity by any stretch, but it just tells you that we're going to go through a change in expectations. The data is going to come in more dovish. The Fed will have more room to move. The markets will feel better for it. And so slightly bad data, not terrible data, not recession data, just weaker than expected data gives the Fed cover. Remember, the Fed have to roll their debts. And if they roll their debts at too high rates, it compounds and the debt gets out of control. What they need to do is roll their debts at the lowest interest rates possible. So they've been shoving it on the short end of the curve so they can hope that they can get rates lower and then they can refinance the whole lot. That's been the game. It's the refinancing game, the everything code game that I first came up with in Global Macro Investor. Next chart, Fed rate cuts, dollars, rates, it's all the same thing. It's all going to reverse. That is my view. That's Julian's view. We think it's going to reverse. Just buy the fucking dip. Part of the don't fuck this up philosophy is buy the fucking dip. We are nowhere near the top. You've got nothing to fear except fear itself, or I don't know what you fear. I don't get it. I don't get it. It's just normal stuff, right? Market goes up, market goes down. You will get big drawdowns very quickly. You might shit your pants unless you've been around for a couple of cycles. That's fine. You can buy new underwear and it'll all be okay, because the market over time will go up until the business cycle peaks, the liquidity cycle peaks, the financial conditions peak. We're just on the way up. So there's nothing to worry about. Okay.
In summary, Raoul Pal presents an optimistic view of the cryptocurrency market as we move further into 2025. He encourages investors not only to remain confident, but also to strategically buy during dips while keeping an eye on macroeconomic factors and political developments. Key takeaways. We are not in a bear market. It's time to buy the dip. Understanding market cycles is crucial for timing investments. Increased liquidity from government policies supports asset growth. Political changes can positively influence market sentiment and adoption. Thank you for joining us today. If you found this video insightful, don't forget to like, subscribe, and hit that notification bell for more updates on cryptocurrency and financial markets.